if you're hell-bent on thinking the market is going to go up for the next 5 years and there's no impediments in the way and the market's just going to hum along, I would encourage you to read a pessimistic or a bear market thesis just to balance out where your baseline is.
Welcome to Blind Spots, a podcast where we're helping you fill the gap between what you want to do with your money and what you actually do. We are professional investors, writers, and financial planners helping you navigate the complexities of finance to optimize what you can control and cut out the rest. Join your host, Nik Schuurmans and Erin Varghese, as we discuss the questions and nuances surrounding everyday money management. Investment advisory services offered through Pure Portfolios, a registered investment advisor with the U.S. Securities and Exchange Commission. Nik Schuurmans and Erin Varghese work for Pure Portfolios. Any opinions expressed by Nik and Erin or any podcast guest are solely their own opinions and do not reflect the opinions of Pure Portfolios. This podcast is for informational purposes only and should not be relied upon for investment decisions. It should not be construed as legal or tax advice and is not intended to replace the advice of a qualified attorney or tax professional. Clients of Pure Portfolios may maintain positions in securities discussed in this podcast. This information is not an offer or solicitation to buy or sell securities. The information contained may have been compiled from third-party sources and is believed to be reliable. Hello everyone and welcome back to Blind Spots. In our last episode titled, Am I a Terrible Investor?, we talked about the qualities of a person that makes a great investor and the qualities of someone who makes a terrible investor. And one of the characteristics of someone who makes a terrible investor is someone who doesn't know how to filter information when making decisions related to investments or finances in general. So that is what we are going to be talking about today.
This is probably the most underappreciated topic out there for anyone that's a do-it-yourself investor, or if you work with an advisor and you're paying attention. And what we mean by an information filter, basically where you're getting your information. And this wasn't a thing back in the 80s or 90s where you had to go to the library or you had to pick up a newspaper or a magazine to get information. Fast forward to 2021, we're hit with the fire hose of information through social media, financial media. You can go on the internet, forums. I mean, it's just a bombardment. It becomes overwhelming. And we're going to talk about the framework for building an information filter to get rid of the noise, focus on the signal, how you can do that, and how you know if you're not doing it correctly.
So this relates, like you said, not only to finances, but just our daily lives. We're constantly inundated with information. How do you think that the way that we've consumed information has changed over the last decade? And how have our filters needed to change along with that?
Well, someone explained it to me like this. Back in the 80s and 90s, the pre-internet days, the press basically had a microphone and they were shouting whatever they wanted to at us, and we just had to take it. Now
Sure.
With social media, you've given everybody a microphone and they can all shout together. They can shout different things. They can shout polarizing, controversial viewpoints, and there's really no filter. And same goes for media and news and blogs and podcasts. So the premise of this is how to weed all of that out, because you can't read everything. You can't consume everything because you'll go crazy.
Right.
Nor does it do you any good just to consume things that confirm your biases, that confirms your beliefs. And again, if you're involved in the investment management part of your life, even if you have an advisor, you're still going to be hit with information. And this all came about because we had a longtime client who actually just passed away, which is quite sad. But a couple of years ago, he came to us with this outlandish conspiracy theory and how the U.S. was going to default on its debt and there'll be a run on the banks and the currency. And I sat there quietly and I listened. But my first question to him was, "What have you been reading?" And he kind of chuckled and said that he recently subscribed to a newsletter of this famous doomsdayer, and we got to the root of his concerns and got to the genesis of some of those comments. So what you consume and what you read often manifests itself into what you're communicating to others, what you're communicating to your investment advisor, or what you actually believe yourself.
Do you think that most people take action on the things that they read, or do they just like to kind of regurgitate it to get a rise out of other people?
In my experience, I'd say it's a mixed bag. I mean, big part of what an advisor does is filter out theories and extreme viewpoints and bring people back to the center. You know, of saying, don't hang out on the extremes. And I think that goes for whatever you're talking about. So we try to bring people back to the center. And sometimes they might want to implement their more active or thematic viewpoints in the portfolio. And we often give them options, the pros and the cons. At the end of the day, it's their money. It's our job to educate them on empirical evidence and if it passes the smell test versus just a story or a narrative.
Yeah, that's good. So you wrote a blog post about information filters back in early 2020, and obviously this has been a prevalent topic for a long time now, but you said that the information we consume day after day influences how we view the world. They say that you are what you eat. I believe the same holds true for the information that we consume. So how does someone begin to develop an information filter?
One, that blog I wrote in about 15 minutes, and I was super proud of it. And then I checked the number of opens and clicks it got, and it was pretty low. So that was a hit to my ego, because I really believe this is what can separate a good investor to a great investor. And if you're a poor investor, this could make you an average or even a good investor. But so many people get it wrong. And look, my information filter is going to be different than Erin's. Erin's is going to be different from yours. But I think some of these principles that I'm about to talk about can translate, and you can create your own filter. So first, I think you want to have balance. So you shouldn't rush out to only read doomsday news or rush out to only read news that confirms your optimistic forecast. You want to understand both sides of the equation. Like if you're hell bent on thinking the market is going to go up for the next 5 years, and there's no impediments in the way, and the market's just going to hum along, I would encourage you to read a pessimistic or a bear market thesis just to balance out where your baseline is. The second thing I would consider is the source of the information. Everybody has an agenda. Like I'm always amused at when people talk to an insurance company or they talk to a bond fund manager, and they come back and say, well, PIMCO bonds and name an insurance company, I don't know. MetLife Insurance is telling me the market is going to be super volatile. It's going to crash 30% next year. And they recommend that I buy an annuity for guaranteed income, or they recommend that I put 100% of my money in bonds. It's like, well, look, those companies benefit from their forecast. If the market is super volatile, they would benefit by you placing your money into an annuity. And it just fits their whole narrative. So
I mean, I experienced that this morning with the webinar I listened to. We're talking about the proposed tax legislation, and it ended up being a pitch for an annuity. So kind of interesting how you can take something that is helpful and educational and something that we should be reading and learning about, but using it to kind of your own advantage and skewing the narrative.
Yeah, and there's a quote out there: if you understand the incentive, then you can better understand the advice. And I think that is so important in 2021. And this could even be a simple thing, like just going through the internet or a Google search and finding a spectacular headline. Look, media companies are paid to sell ads. Websites are paid to sell ads. The more spectacular you can make a headline, the more ad revenue that entity can produce. It's the same for these folks that write a doomsday letter. So there's like, I think Hussman, and there's a handful of older gentlemen that have made a career out of predicting doom and gloom. And you can follow them and Google them, and you'll see they've been predicting doom and gloom for the last couple decades. They're not in the business of giving sound advice. They're in the business of selling their product, which is often a newsletter or a book. And the fact is, in the history of US markets, there isn't a track record of successful investors that have bet against American companies. It just doesn't exist. So take that advice with a grain of salt. If you're predicting the same thing over and over again, that's not actually a prediction. That's like a broken clock approach. Like eventually a broken clock is right twice a day. So it's the same theme.
Sure. So you follow a handful of people either on Twitter or different blogs. Can you share some of the ones that you personally read or listen to?
I mean, I should start with, I ignore 99% of what's out there. Like, I don't watch mainstream news or mainstream media or mainstream financial media like CNBC. You know, I might turn on Bloomberg as I have my morning coffee just to see what the markets are doing. But in general, and I can drop some names, but I think blogs are much better than mainstream media. I still think the Wall Street Journal is pretty solid. Twitter is an underrated resource if you know who to follow for market information. I mean, it's a freaking gold mine. Sometimes I can't believe that site is free, but it does take some time to refine and unfollow people to get the correct filter that you want. So Pure Portfolios pays for third-party research, which I think is the cleanest form. So in essence, we go out, we pay an independent company to provide us market data, charts, a lot of information where we create our own capital market forecast or capital market ideas that we implement in client portfolios. But it's a great source of news. So that's Bespoke Investment Group. They're based out of New York City. I use Koifin for screening. So running various screens, checking performance, back testing, looking at economic data points. And the folks that I follow on Twitter are Mebfavor, Wes Gray, Verdad Capital Management. There's a couple here. I can go through some of my list or even share it in the show notes. Morgan Housel's great. He's the Collaborative Fund. He's a business writer. He's like a private equity guy.
You have Alpha Architect.
Charlie Balelo, he's super good, posts a lot of charts. I'm just going through my Twitter feed right now. Eric Balchunas, he's a Bloomberg exchange traded fund guy. So he's been covering the evolution of the Bitcoin exchange traded fund. Peter Schiff, he's kind of a polarizing guy. He hates Bitcoin. He gets a lot of crap from people. He's kind of an old school investor, which is kind of nice to mix some of the trend following guys like Mebfavor and Wes Gray with some of the older school guys like David Rosenberg and Peter Schiff, who just came up in a different time and their baseline's just much different. So it's nice to compare and contrast those folks.
Yeah, I think a lot of times, especially with social media feeds, we tend to follow a lot of the same things, talk about confirmation bias, the things that you agree with. And so then you end up with kind of a customized viewpoint of the world that is just fed directly into your brain. So mixing it up and having a good basket of options.
It's true. People tend to seek opinions that validate their current beliefs. And I think that's okay. But if you're going to level up, you want to understand the opposite viewpoint. Like whenever someone comes to me and they're fired up about an asset class or a stock or whatever, a cryptocurrency, I challenge them to understand the opposite case, because the world is full of smart people. I can guarantee you there's someone that's just as smart or smarter that holds the opposite belief as you. And I'm not saying that you need to change your belief, but if you're a professional, you want to understand the opposite case better than the opposite case understands their case, if that makes sense. So you want to understand their viewpoint just as well. So Erin asked me about changing my mind a couple weeks ago. And I think a test, if you have a sound information filter, right? You're doing all the things that I mentioned. You're balanced. You're looking at the pessimistic and the opposite. You're considering the source. You're seeking information that challenges your viewpoints. If you've built that filter, you should have changed your mind about something in the last week or so, or the last month or so. So having a tight filter, a good information filter, should encourage you or promote you to change your mind. If you have a poor information filter, you're going to entrench. You are going to anchor to what you believe in, and you probably haven't changed your mind in the last month or the last year.
I was going to think like more decades, but you're much nicer than I am. So when I initially asked you that question, you didn't really have an answer. So you've had some time to think about it. So when is the last time that you have changed your mind?
Well, I just wrote a blog about this because the question was so great. It's a great question. And it's so appropriate for 2021 because look no further than your social circle or your social media feed. It's people just entrenched in their beliefs. Like you can present someone with an evidence-based counter argument and they'll tell you that you're a freaking idiot. And it can be frustrating. I myself don't really engage in those conversations because they take years off my life and no one really wants to change their mind anyway. But to your question, the last time I changed my mind, and I've changed my mind a few times. Let's see something that won't bore our audience. So I used to be on social media, and this one's a little tricky because Pure has business pages. We've got a LinkedIn page. We've got a Twitter page that we share our podcast and our blog and our explainer videos on. But I've got rid of all of my personal social media pages. There's no social media apps on my phone. And the other area that I've really tried to pivot the way I operate is I don't engage in polarizing arguments. I don't engage people in polarizing topics. I tend to listen. I don't offer my viewpoint. If someone offers me their viewpoint, I'll look at them and say, you're probably right. Like I've started just saying that, you're probably right. And it saves me time. It saves me energy. It puts them at ease. And I just carry on about my day. Like I don't want to I play golf as my outlet, as my mental break. I don't want to talk about politics or taxes or what such and such said on CNBC. Like I just don't. So you're probably right. Let's play golf.
I think that is probably a relationship saver. Like you said, it saves you time and energy because people have very strong opinions. And when they want to express them and be heard, they want to be validated. And so when you come back with something that does not give them what they're looking for, can set you up for failure.
Well, try it, Erin. So like the next time someone tries to rope you in, because people know what they're doing, they're trying to rope you in with a comment or a question or a statement. And you just look at them and say, hey, you're probably right. And the look on their face is like, what? It's completely disarming, but it's also refreshing. And again, it just saves you the time suck and the energy of going down these rabbit holes. And then the last one I'll leave you with, because I think this is great too. I used to think that saying I don't know was a sign of weakness. Now I think it shows a level of maturity, a level of strength, because despite evidence to the contrary, you don't always have to have an opinion on something. It's perfectly fine to say that you don't know. But so many people have a tough time with that. Like I have a friend I went to college with. I can ask him a question about anything, the most obscure thing on earth, and he'll just kind of blankly stare and he'll come up with a BS answer that makes no sense. And I'm like, dude, you could have just said, I don't know.
Have you ever actually said that to him?
Oh, plenty of times. Well, I have a friend that told me about this one time. They backtrack and they want to save face, but that's more about ego. It's like, look, you can say you don't know. It doesn't mean you're stupid. It's actually quite the opposite.
Yeah, it's a sign of maturity, I think.
So get to work building your filter. If you struggle balancing out your disposition, if you tend to be super pessimistic or super optimistic, get to work on building your filter if you want to be involved in your investment management or be plugged into what your advisor is doing. This can save you heartache, can save you emotional decisions. You'll be a more balanced, measured investor. And this is more along the track of what a professional investor does. So it'll just allow you to level up and give you peace of mind.
Yeah, I think level up is a great way to describe that. All right. Well, thanks everyone for listening to this week's episode of Blind Spots. The topics that we write and talk about come from investors like you, so send your questions to insight@pureportfolios.com. We also offer free portfolio reviews, so if you'd like a professional investor's opinion on your current portfolio, we'll give you insight on your fees, tax efficiency, and potential conflicts of interest. You can visit pureportfolios.com/free portfolio analysis to learn more. Thanks for listening. We'll see you next time.